Hey, what's going on, everybody? It's Randy Wolfe. So today I have some information about the Fed just cutting rates. It's going to be action-packed, so let's dive in. What if I told you that the Fed cutting rates again might actually be a warning sign, not in fact a reason to celebrate? Now, they just dropped rates for the third time this year, and here's kind of the scary part. They did it without any new inflation data. Now, that's never happened before in U.S. history. In this video today, I'm going to break down what's really going on behind the scenes, what this means for real estate investors, and why this rate cut could signal something big coming in the economy. All right, so here's what happened. The Federal Reserve announced its third interest rate cut of the year. And on the surface, like most people think, hey, this is good news, great. Cheaper loans, easier to borrow money, housing will pick up, that sort of thing. But when you look deeper, this move doesn't look like optimism. It actually looks like panic, maybe even prevention. Because normally the Fed makes these moves after reviewing key data, job reports, inflation numbers, and GDP trends. But thanks to the government shutdown, we didn't even get the October inflation data, and yet they still cut. So again, that's the first time in U.S. history that this has happened. And it doesn't stop there. The Fed also ended quantitative tightening. And that's the process basically where they reduce the amount of money in the system to fight inflation. So instead, they're now injecting liquidity once again, buying $40 billion worth of treasuries in just 30 days. That's the exact opposite of tightening. And it kind of signals that there's behind maybe closed doors, the Fed might be seeing something fragile. Maybe credit markets are starting to tighten, small banks could be in trouble, or maybe a slowdown that hasn't shown up yet really in the headlines. Now, here's why this is so important to understand. The Fed doesn't just cut rates for the fun of it. Every major credit cut cycle comes right before, typically you see a major economic downturn. If you look back historically, you had 2001, the dot-com bubble burst, 08-09 was the housing and financial crisis, and then we all remember so recently the 2020 pandemic when all the shutdowns and all that stuff was going on. And so when you see 3 rate cuts in a single year with no data, it's not necessarily a soft landing. It's the Fed maybe trying to stop a crash before it hits. And if you're serious about becoming a better investor, this is the kind of macro stuff that you have to pay close attention to, because when the Fed starts pulling levers like this, there's always going to be opportunity, but only for those who understand the game. By the way, if you want to learn how to position yourself to profit in any market, be sure to check out my private community. I will put that link in the description below. So what does this mean for housing and investors like us? Well, in the short term, you might see rates on mortgages and HELOCs start to tick down just a little bit. But that doesn't mean buyers start flooding back in overnight. If the Fed is this worried about growth, that tells you jobs, consumer confidence, and credit markets could actually be softening a little bit. And that means cash flow, not speculation, is king. It's time to focus on rental stability, buying under value, and locking in long-term financing while others are uncertain. Because remember, in every downturn, wealth doesn't disappear, it transfers. It goes for those that are unprepared to those that are prepared. So as investors, our job isn't to panic, it's to position. Rate cuts like this tell us to keep cash ready, stay selective, and double down on deals that make sense even if the economy slows down. If you got value from this breakdown, hit that like button and subscribe for more weekly insights, and check out my private investor community where I teach everyday people how to build passive income through real estate no matter what the Fed is doing. Because the truth is the Fed reacts, but investors who understand the pattern profit. Once again, I appreciate you watching this video, and I look forward to seeing you on the next one.